All right, everybody. Thank you again for being with us this week. As always, I'm here with my good friend and one of the best mortgage brokers that we have here in Birmingham, Alabama, Andy Gagliano. Andy, how well are you doing today?
I'm doing very well. Thank you for asking, and I appreciate the compliment.
Oh, definitely.
That's
And
big shoes to fill because we've got some good mortgage companies here in town. So
oh
I
yeah,
appreciate
there
that.
is good, and it's a handful, and you're part of that handful.
Well, I'm glad I made the cut.
Yes, sir. Me too. Andy,
Uh,
Uh, let's talk a little bit of what's going on right now, and it's the talk from everybody, and it's the big buzz. And I'm always cautious about that, especially when it's people that have not enough knowledge to talk about it. And it's interest rate. Interest
right.
rate went down again, so everybody's going crazy. Everybody's going nuts about it. And we have some buyers that start filling up applications, and we got some other people that they still sitting there and saying, "Hey, maybe it's gonna go down one more time. Let's see what happened in September. Let's." We know the story
Yes. Been there, done that.
exactly. So tell me, Andy, what's going on with the interest rate? What's the big buzz?
Yeah. So it basically works like this. In a market when interest rates are increasing, those rates go up very quickly most of the time. When the table turns and we get into a market where rates start to decrease, well, then it's kind of like a snail, trying to crawl down the stairs. I mean, it's slow, it's slow, it's slow. So we have still been seeing interest rates decline over the past couple of weeks. That's not a shock, really. It's
Correct.
confirming the trend that we're in with rates coming down. And, there's, uh, I just smiled today because I heard an industry expert. He's actually the guy actually owns one of the largest lenders in the country. And I heard him speak today and he said, "Hey, we need to do a better job. We in the mortgage industry need to do a better job of educating our buyers and our prospects about interest rates. And we need to stress to them that, hey, when the Federal Reserve lowers rates in September by 0.25%, or if they surprise the world and lower rates by 0.5%, then we could actually see mortgage rates go up." And now I'll say he's right about half of that. If the Federal Reserve does lower rates 0.5% in September, I think we'll still see mortgage rates come down a good bit more. But here's the thing, for all the people that are waiting for rates to come down because they're waiting on the Federal Reserve, that 0.25% decrease in interest rates is already on the books for mortgage rates. So get your money today because you're already taking advantage of the 0.25%. And I don't necessarily think that he's far off when he says when the Federal Reserve lowers rates by 0.25%, mortgage rates could go up. And so, without getting too much into the weeds, all I need to do to explain that to the consumer out there is to say mortgage rates do not follow the federal funds rates.
Right.
So keep that in mind. I've been in this business for a long time, and I can tell you more than enough times to count on two hands when the Federal Reserve has either raised rates, their federal funds rates, and mortgage rates have come down, or the opposite. The Federal Reserve lowered the Fed's fund rates and mortgage rates went up in response to their decision. So, and really how that works, just to I mean, I can simplify this so much, and I can just say this. I already mentioned that the 0.25% decrease in the federal funds rate is already priced into, already factored into the mortgage rates. So now what the mortgage rates are watching is they're watching the comments that the Federal Reserve makes about any future cuts and when those could possibly happen. So, we don't know right now. Are we in a situation with the market where the federal fund or the Federal Reserve lowers rates by 1%, 2%, 2.5%? We don't know. Maybe they're only going to lower rates by 0.5% and continue to watch the economic news that comes out. So that's what he's talking about specifically when he says that the rates, mortgage rates, could even go up after the Federal Reserve lowers rates. So again, just to stress that one more time, mortgage rates now today are 0.25% lower than where they were a couple of weeks ago. It's time to get into the market and buy. And you cannot make bets on the headlines and the buzz in the news.
And not only that, because the people that is waiting, they haven't even applied for a mortgage.
So true.
So they don't know what's going on. And right now that the mortgage rate went down, and to be honest and truly, I mean, if let's say they go down another quarter of a point,
Mm-hmm.
how much different that will make on a house payment, really?
Well, I can tell you that it will make about $20 per month per $100,000 borrowed.
There you go.
So it's really not a
It's
lot of
not
money.
really worth it, the waiting. And
No.
not only that, if you apply today for a loan, if somebody applies today for a loan, today's rate, and they get pre-qualified and pre-approved on that rate, we still need to find a house. So that can take another 30 days, right?
Yeah.
And let's say for ABC reason, we were able to find a house in 2 weeks. They can lock the rate that they've been quoted, or can they kind of like a reapply and get another quote in case they go down?
Yeah. So, all right. You have just barely pulled back the sheet from the head of the mortgage industry secret that a lot of mortgage loan officers won't tell consumers. And here it is. Since you just pulled the sheet back just a little bit, I'll just go ahead and rip it completely off the bed and we'll reveal it. So when a buyer locks in an interest rate on a property, and let's say they lock a rate in today, and let's say that rate's 7%. I'm just using round numbers. That's not actually, it
Yeah.
could be today's real rate, but we're in that 6.5 to 7% range currently. So let's say the rate's 7% that a buyer locks in, and over the next 3 weeks, interest rates drop, let's just say 0.25%. So now that buyer that's locked in at 7%, 3 weeks ago, they could get an interest rate of 6.75 by locking in a rate today. Your mortgage loan officer doesn't want you to know that you can oftentimes float your interest rate down after you're locked in to that 6.75 rate. So, and I need to say this before I go too much further. Every lender has a different rate renegotiation policy. And not only are they all different in just what they'll allow, but there's different qualifications or criteria in order to be able to float that rate down. Most of my lenders say the rate has to be at least 0.25% lower than the rate that they're currently locked at. Now, if that's pretty common in the industry, I don't know. I can only speak for the lenders that I work with.
Yeah.
But it is a possibility to be able to put a contract on something today, lock an interest rate today, and 7-10 days before closing, float that interest rate down to a lower rate if rates do drop. So there's some
Now you have
protection
to
there.
see if it's worth it to uh, float it down, because I'm guessing there is some fees that comes with that.
So the answer is yes, but typically that fee is factored into the interest rate. So the buyer won't necessarily pay that fee out of pocket. It would just be, just to give you an example, let's go back to the example I gave to start with. That buyer's locked in at 7%, and the real interest rate for today is 6.625, and the buyer floats their rate down. Maybe we can't get them the 6.625 because of that renegotiation fee. Maybe we get them 6.75. Now, that's something that, I guess from the outside looking in, you would say a buyer may say, well, that's not fair that they didn't get the current rate, but they're getting a better rate. And
Correct.
what I always tell our buyers is this: when you lock an interest rate in, the lender is making a commitment to you to deliver that interest rate to you for that specified period of time. So if you lock in a 7% rate for 30 days, as long as you close on that 30-day, or as long as you close within that 30-day window of time on the sale of that home or the purchase of that home, then you're going to get that 7% interest rate. Now, even if rates went to 8% over that 30-day window, you're getting 7%. So the lender's looking at this and saying, hey, this is a two-way street. This is a two-way commitment. If I'm going to guarantee that you get a 7% interest rate, even if rates go up, then the same should be true if rates go down. And
Correct.
that's one of the reasons why this is not just advertised all over the place that most lenders will allow this. Because, I mean, just think about it. If you were in a marriage that your spouse said, well, I can cheat on you, but you can't cheat on me, are we good? And that essentially is what's happening by being able to lower that interest rate. You are getting the lender to give you something that legally they would never be able to do the opposite to you. They would never be able to raise your interest rate after you've locked in, assuming you met all of the criteria for that rate lock and closed within that 30-day window.
Yeah.
So that's kind of why they do what they do. And, hopefully none of my lenders will see this and I won't get called and kicked in the rear
No, but
end.
it does make sense. It does make sense. And also, just let's remember, you as the consumer, you as the buyer, the only way that you can lock a rate is by being under contract to find a house, submit an offer, and that offer has been accepted. That's the only way. Not before, not later, not while you're applying, your lender told you 7, and unfortunately, in 2 weeks, it goes up to 7.5, then you're going to be at 7.5.
Yeah.
Because if you're not under contract, you cannot lock the rate. Correct?
Yeah, that's correct. Yeah.
Perfect. Now, Andy, something happened this week that I'll find out. There is a local financial institution, a local bank here in Birmingham, Alabama, that with the new NAR settlement, the new law that's coming, that is actually in effect already, where it said that the buyer's agent to charge upfront, no, hold on, it's not upfront. The buyer's agent When a buyer hire a real estate agent, they have to sign a buyer's agreement, representation agreement. And on that representation agreement, it's stipulated that if the seller does not pay the commission, the buyer is going to have to pay the commission. And just for an example purposes, let's say it's 3%. So if the seller only pays 2%, then the buyer is responsible to pay the difference, which will be 1%. Now, this local bank, this local financial institution is asking buyer's agents to provide the buyer's agreement compensation to them to make sure that the buyer has enough money to cover that compensation in case is necessarily in order for them to approve the loan. Have you encountered anything like that? Have you heard anything like that? Or do you think it's going to become pretty common? I believe it's going to become pretty common for financial institutions requesting that to make sure that the buyer is able to pay that and not get into financial trouble.
Yeah. So I think you're spot on with that, Tony, and here's why. That buyer's agency representation agreement, that is part of the sales contract. And when getting a mortgage, we require the fully executed sales contract. That's all addenda. That's any, if there's something written into the contract, just to, reference the 1, 2, 3 form, then we want to see the 1, 2, 3 form. That's a requirement by Fannie Mae, Freddie Mac, FHA, VA, and USDA. We've got to see every bit of that sales contract, and your buyer's representation agreement is part of that sales contract. So yes, we're looking to see that. And, this is, I guess here's the good part about the NAR settlement is that it's nationwide.
Correct.
This is not an Alabama thing. This is not a California thing. This is not a New York thing. It's nationwide. So what that does is that creates a little uniformity in a very ununiform world of real estate. And so underwriters know that if a buyer's working with a real estate agent, then, and it's pretty easy for us to find that out, then there's some sort of an agreement. Maybe that agreement says that the buyer's paying 0 to their, for representation by their real estate agent. Maybe that agreement says they're paying 5% to that realtor for their representation. And of that 5%, maybe it's all coming from the seller. We don't know, but that's why we're asking for those documents. So yes, I'm very surprised if there's been a contract that, well, we know that now we're towards the end of August. So this new law, and I really hate to say it's a law.
Yeah.
This new requirement is now 11, 12 days old.
Correct.
Not many deals have closed with or since a contract was written the 17th of August. There haven't been many closings yet. So I would be surprised if there's going to be very many of them at all that are going to close without that agreement attached as part of the contract.
And I believe that also is going to affect the pool of buyers available, because maybe they have the money for the closing costs, maybe, they get a grant, you name it. But if there's going to be a difference that they're going to have to come out of their pocket, and if they don't have it and we cannot get the grant for it, we cannot get, the work around it, then you will have less buyers in the market. So everybody's talking about, interest rates are coming down. We're going to have a lot of buyers again. So it's a good time to sell. It's always a good time to sell. quite honest. You want to sell your
That's
property,
true.
it's always a good time to sell. In fact, 5 years ago it was better than now.
Yeah.
Just saying, so we have to be careful. Also, the sellers, they need to, realize what kind of concessions they're going to give. And the commission that is paid to the buyer agents is not considered a concession.
Yeah.
So let's not mix the words. Is concessions towards the buyer can be paying for closing costs, paying for prepays, paying for the attorney fees, but does not include the commission. That is totally different. Now,
Yeah.
from the financial part, from the lender side, maybe the lender can consider it a concession. I don't know. We have to see. Like you say, it's been 11 days since all this has been implemented. We're learning as we go.
Yeah.
And it's gonna be a lot of holes along the way, and a lot of troubles that we probably don't know the answers yet. And I believe a lot of people, a lot of realtors are overthinking things, and I'm thinking way ahead. I understand a lot of people wants to be prepared when they get to the point, but I remember one of my a good mentor, a good teacher that I have always say, you know what, we're gonna worry about it when we get to the bridge. We'll figure it out how we're gonna cross it.
That's right. And that's the way to do it. It
Exactly.
really is. And there's nothing wrong with being prepared.
Mm-hmm.
But what we can prepare for is what we know today to be the
Exactly.
case. And I hate to muddy the water even more, but this is a fluid situation. This could be completely different in 6 months or 12 months
Yeah.
because from what I understand, and I can't confirm this, but from what I understand, the Department of Justice for the United States is not really saying that they're through with this. So
Correct.
there could be more coming. It could be something completely different coming, but what we know is today, and that's what we can prepare for.
Exactly. That's what we can prepare for, and shall have a great communication with your lender, and not only with the lender, is communication between the realtor, the lender, and the buyer. And we have to include in that communication the realtor that represents the seller and the seller as well.
Yeah.
Right
Closing,
now, I
closing
have these
attorney and the
buyers.
title company.
Yeah, I mean,
Yeah.
everybody has to talk. So if in the past you didn't like the other realtor because you worked before and you felt that he didn't treat you good, and in the past you didn't like your closing attorney, guess what? Now it's time to keep it to yourself, smile, be kind. I went to an event today, and one of the words that this lady said was, be kind to each other. Right now is the time to help each other, not to be against each other.
Yeah.
And that was a very positive message that she gave us. But communication is totally the key at this point. I'm having one of my cash buyers. We're going to be looking at the properties, and they didn't have a problem signing the buyer's representation agreement and pay whatever difference, if it's any, on the commission, because they gave me the list of properties they want to go see. I immediately text the other agents. Right now, people text more than talk on the phone. I'm still trying to get used to that. But they respond immediately. It was fine. They told me they answered all the questions that I needed to know. And based on that, we decide which property we're gonna go see and everything. So
Yeah.
I think it has to do the approach that we have among each other, even with our loan officers, even with our mortgage bankers. We need to be more kind to each other, because if I'm working with you, Andy, I really don't want to piss you off.
Tony, I've only broken a few kneecaps in my entire career, so no worries. You're good. You're good.
Good. Well,
No,
Andy, is there anything else you would like to add to this conversation today?
the only thing I think I can add is just to stress to the consumers who are watching this to really, if if you're not sure who to use as a realtor, then I suggest you interview your realtor or your prospects for the realtors that you want to use. Obviously, I would highly recommend interviewing Tony. I would highly recommend using Tony, but if you're not sure about who you want to use, interview, and interview them like you're hiring them, because guess what? You're hiring them to do a job for you, and that job is to represent you. And I'm involved in a transaction now. I will never mention any names, but I'm involved with a transaction now, or in a transaction now, with a real estate agent who's representing a buyer of mine. And I'm just going to say that I would never hire this agent to represent me.
Yeah.
She's got her interests above everyone else's in the transaction. And, I feel obligated to say this. She is the exception in the real estate industry right now.
Yes.
There are so many true professionals who have a servant's heart, who want to help buyers and sellers. And again, Tony's one of those. And I just think it's important, if someone's unsure, don't just run out and hire someone because it's your neighbor's sister or because your neighbor used them. Your personalities may not work right. They may not mesh. That person, just because they represented your neighbor, doesn't mean they're going to do a great job for you. So, be thorough and protect yourself. And that's what you're doing by interviewing realtors.
And I
give Tony a
appreciate
shot.
that. I really appreciate that advice and that statement. And that's something that I've been told people too, in this business, people like people alike. I think you can be the best real estate agent in the world.'t if we don't have that chemistry, we don't connect in the way that we should connect. If I don't feel that you have the best interest, my best interest over yours, I'm not going to work with you. It doesn't matter if it was preferred by somebody else or not.
Yeah.
So that's a great advice, Andy. Interview, get the feel, interview a couple agents, 2, 3 agents, so you can get the feel of what's going on. If you feel that one of those agents is being pushy, then probably that agent don't have the best interest for you.
Yeah.
And
it
has to be somebody that.
Yeah, totally. And I'll go one more on top of that. Do the same for your loan officer.
Exactly.
If your realtor refers a loan officer to you, or 2 or 3, and you speak to them and you don't like them, or, your personalities just don't mesh, whatever it is, then get some more references, check around and make sure that you can work with someone. You're going to be working with your realtor for weeks. Sometimes Tony's going to kick me when I say this, because, sometimes it's months that you're working with your agent.
Buyers for months.
Yeah.
It's true.
And the same for your loan officer. You're going to be giving very, very personal information about yourself to this loan officer. You need to be able to trust them. And you need to know that they've got your best interest at heart. And the only way you're going to do that is by having conversations. So
exactly. Meet over coffee, go to their office, get the feeling. It's very important. I think we're going to have to go back to the basics. Like back in the day, we didn't have the internet, we didn't have the cell phones or anything. And we actually met our realtors and our mortgage bankers and loan officers at their offices. I remember that very well back in the day. Andy, if people want to get a hold of you and ask you a million questions about what's going on with the mortgage, how can they reach you?
I can be reached at 205-979-4412. I'm at extension 1. How about you, Tony?
All right. Well, after you talk to Andy, he get you pre-qualified and pre-approved, and he gave me the green light. We're going to start looking for houses. You can reach me at 205-370-3248. just call me, set up an appointment. We can meet at my office. I can meet you in a coffee shop, whenever you feel comfortable. And we go from there. If I'm the agent for you, if I'm the guy for you, I'm going to be more than happy. And it's going to be an honor for me to help you guys achieve the home ownership goal. So, Andy, thank you again. Thank you for being with us this
Thank you,
week. And
Tony.
see you next time.
Sounds great. Looking forward to it. Thanks, Tony. Goodbye, everybody.
Take care.